Happy Friday, everybody. This is your market update for August 18th. So stock market this morning initially starting the day down across the board, but has since then bounced back and rallied a little bit. Currently, the Dow is up 70 points. NASDAQ is still down on the day, but only 32 points, and S&P 500 is pretty much flat. Mortgage-backed securities did rally back yesterday afternoon, well off of its worst levels of the day. Still closed down, but only 5 basis points. And actually this morning started off the day down 5 basis points as well. But just like the stock market, the bond market is rallying a little bit today. Currently, last I looked a few moments ago, mortgage-backed securities are up 13 basis points. So not a huge swing, still trading between a strong level of support and resistance. But momentum has us headed in the right direction, and hopefully that will continue throughout the course of the afternoon. There's not a ton of economic information coming out today. It's kind of a stop the bleeding type of day, if you will. I think most of the damage this week has been done. But again, momentum carrying in the right direction, and hopefully that will continue. A few things I did want to note that I feel like are important moving forward. The full impact of the Fed's rate hikes that have occurred over the last year or so are yet to be felt. There's a lagging indicator or lagging impact, if you will, of those Fed funds rate hikes. So certainly we're going to see the impact of that moving forward, more so than what we have so far. While consumer spending appears to still be strong, much of that is on credit cards, as I mentioned earlier this week. Remember, those credit card rates are high and credit cards have a limit. Student loans go back into repayment October 1st. So now you've got consumers that are going to have payments that they haven't had for the last several years. They're going to have those obligations moving forward as well. And then also, excess consumer savings has been depleted significantly as a result of stimulus during COVID. Back in March, nationally, excess savings for consumers was right around $500 billion. As of June, it had depleted down to about $190 billion. And at that rate of depletion, by next month, it should be completely wiped out. So all those things taken into account, I think we're going to see some significant changes potentially to a lot of the economic reports moving forward. So certainly something to keep an eye on. Next week is a light economic week as well. We do have existing home sales on Tuesday, as well as mortgage application data on Wednesday, and the Fed's annual symposium in Jackson Hole, Wyoming on Wednesday as well. So that'll be something to keep an eye on as far as comments from that meeting. Thursday, we have durable goods orders and initial jobless claims. Hope that you all have a great weekend, and I look forward to seeing you on Monday.